two neighborhoods in Langley separated by a single overpass. One had 110 homes for sale and sold 18 of them, and the other one had half the inventory and sold more. Same city, same month, completely different market. And that one example tells you everything you need to know about what is actually happening in the Fraser Valley real estate market right now. In this video, I'm going to break down the April numbers across Langley, Cloverdale, Surrey, and South Surrey. I'm going to show you exactly which price points and neighborhoods are moving and which ones are sitting and why. And by the end of this video, you'll know more about this market than most people in it. Let's go. Hi, I'm Matt Romero. I'm a real estate advisor with Angle Vokers out of Fort Langley. Every month I break down what is actually happening in this market, not the headline version, but the real boots on the ground version. Today we're going deep. Fraser Valley overall, then Langley, Cloverdale, Surrey, South Surrey, and White Rock. I'm going to show you the data, tell you what it actually means, and give you my honest take on where things are heading. So let's get into it. Let's start at the top, the Fraser Valley. The Fraser Valley recorded 1,118 sales in April. That's up 11% from March and up about 7% compared to April of last year. Now that year-over-year increase is the first we've seen in over a year. Year to date, we've recorded 3,585 sales in 2026 compared to 3,808 at this point in 2025. So we're still running about 6% below last year overall, but the direction of change in April is encouraging. New listings were up 6% from March, which is totally normal for this time of year. But here's what's interesting. New listings are actually down compared to this time last year. So less fresh supply coming to the market combined with improving sales, that's a combination that's worth paying attention to. Active listings across the Fraser Valley sit at 9,816. That's 45% above the 10-year seasonal average. So inventory is still elevated in the broad sense of the market. Overall, sales to active ratio is at 11%. So that's technically a buyer's market territory. Balanced is anything between 12 and 20%. Now let's look at the prices in the valley. The composite benchmark for the typical Fraser Valley home is $800,900 to $200. That's up 0.1% from March. And that is the second consecutive month we've seen an increase after a long decline. So small move, but 2 months in a row of upward movement is something worth noting. By property type, detached benchmark sits at 1,374,800, down 8.8% year over year. Townhomes sit at 771,600, down 7.4% from last year. And apartments sit at 491,000, which is down 8.3%. Average days to sell for the detached market is 37 days, townhomes 32 days, and condos 42. So detached are the quickest, townhomes are moving the quickest, and condos are taking the longest. And that tracks with everything we're about to talk about. Now, quickly, before we go into the individual markets, here's my honest read on where all this is heading. Although April was a strong month, it already feels like May has taken a slight step back. My read is that we are near or at the peak of this spring market. I expect things to mellow out throughout the summer. Now, in regards to prices, I don't see anything pointing to increase in prices anytime soon. My expectation is that they'll flatten out or go down another 2 to 3% before things stabilize. I've said this in previous videos and I still stand by it. But again, that broad number tells you almost nothing about street level reality. The real story is in the neighborhoods and the price points underneath it. So let's go there now. And we're gonna start with Langley because that overpass example from the top of this video is gonna make a lot more sense. Langley is my primary market, so I'm gonna give you the full picture here. Overall, detached sales are up 3% month over month. Attached, up 11%. Benchmark prices in Langley for detached are at 1,526,200, up 0.9% from March. 2 consecutive months of upward movement. Now, townhomes sit at 812,000, essentially flat month over month. And condos sit at 554,100, down slightly from March. Year over year, all three of these segments are still down. Detached is down 7.7%, townhomes down 5.9%, and condos down 8.8%. But that month over month stability in detached is something I'm watching closely. So now here's the example from the hook. Willoughby, there was 110 listings with only 18 sales last month. So that's a 16% sales ratio. One overpass over on the other side of the highway, Walnut Grove had about half the inventory and 19 sales with a 41% sales ratio. Nearly half of everything listed in Walnut Grove sold in April. That's not a buyer's market, that is currently a seller's market in the same city of Langley in the same month. And why? Price point. Affordability is the answer. And affordability is what's driving the market right now. Walnut Grove carries a lot of product in the 1,250,000 range to the 1.5 range. That detached bracket came in at a 30% sales ratio. 101 listings, 30 sales for all of Langley. Those are not random buyers. Those are people who have owned a townhome for some time, built equity, and now are stepping into their first detached home. And the entry-level detached market is even more active. 900,000 to 1 million has 13 listings, which would primarily be in Aldergrove, and that's sitting at a 54% sales ratio. So more than half of everything in that range sold in April. That's highly competitive. And speaking from experience, I've had 2 clients this year that we've been in multiple offers in Aldergrove. So now above 1.5 million, the sales ratio drops to about 14%. And above 2.75 million, the Langley detached market is essentially non-existent. There was one sale above 2.7 million in all of Langley last month, and it came in at the 3.5 to 4 million range. So the Langley luxury market right now is quiet, and that's just the reality. Now, onto the detached side, and this is where things get interesting. So let's look at Willoughby Heights specifically. In April, there was 405 active attached listings. 92 of those sold. So that came in at a 23% sales ratio overall. Of those 92 sales, 29 came between 600,000 and 700,000. So those are likely larger condos and entry-level 2-bedroom townhomes. Another 26 sales between the 700 and 800,000 at a 28% sales ratio. And I can tell you again, that's another market where I've had active buyers compete in multiple offers. Now, these multiple offers aren't going over ask. Typically, you're still able to negotiate, but it's coming down to who has tighter terms and obviously who's coming closest to the sale price. Now, 800 to 900,000 dropped down to 18%, and then 900 to a million came back up to a 22% sales ratio with 15 sales. And then a million to a million 25 hit a 31% sales ratio, 29 listings and 9 sales. For context, Langley City attached market had 217 active listings with only 40 sales. That came in at an 18% sales ratio. And then Walnut Grove had 67 attached listings with 16 sales coming in at a 24% sales ratio. Now, here's this flip side worth talking about. Some buyers who have set out to buy a detached home are not finding what they want at the price point that they can afford. And rather than stretching their budget or compromising on a home, they're pivoting into larger townhomes or row homes instead. That is likely a big driver of why the million to a million 250 townhome / row home range is sitting at a 31% sales ratio. In Langley, a good portion of those are probably row homes, more space, more privacy, without the full detached price tag. So the move up ladder is actively moving, and every aspect of it comes back to one thing: what people can actually afford. Now, let's move to Cloverdale because it actually gives us the clearest picture of exactly where the affordability line sits. The data there is almost textbook. So Cloverdale is actually one of the stronger performing markets in the valley right now. On the attached side, the affordability theme is identical to Langley, but the data here is quite a bit clearer. So 300 to 400,000 came in at a 31% sales ratio with 13 sales. 400 to 500,000 had 6 sales coming in at a 30% sales ratio. 500 to 600 had 20 inventory with 7 sales, and that came in at a 35% sales ratio. And now 600 to 700 had 29 inventory with 10 sales, coming in at 34% sales ratio. And then 700 to 800,000 had 45 inventory with 11 sales, coming in at a 24% sales ratio. Every single bracket up to 800,000 is sitting in a balanced to a seller's market territory. Now, watch what happens the moment we cross the line over 800,000. 800,000 to 900,000 had 66 listings with only 8 sales. That came in at a 12% sales ratio. That is the biggest inventory bucket in all of Cloverdale attached market and one of the lowest sales ratios in the entire group. Below 800,000, it's all in seller's market conditions. And then above 800,000, it's a buyer's market. Affordability draws a line with precision that it's almost hard to believe until you look at the data. And this pattern repeats in every single market we're going to look at today. Now, at the high end of the Cloverdale attached, something interesting shows up. 1 million to 1,250,000 has 67% sales ratio with 3 listings and 2 sales. Small sample, but the same theme. Move-up buyers are landing in high-end townhomes and row homes if they can't get into the detached market. On the detached side, Cloverdale between 1 million and 1.25 million had a 44% sales ratio, 43 inventory and 19 sales, which comes in at a seller's market. Then 1.25 to 1.75 million, that range came in at a 23% sales ratio, which lands it in balanced territory. So Cloverdale is a market that rewards correct pricing, and if you're in that right price bracket, you're going to sell. It's simple as that. Now, Surrey, this is where the story flips, and I'm going to show you what happens when a market has too much of everything. Surrey is by far the most difficult market we're going to cover today, and I want to be straight with you about that. On the detached side, Fraser Heights was the most active community in Surrey at an 18% sales ratio, 72 listings and 13 sales, and for Surrey, that's a solid result. The most active price point in Surrey detached was 900,000 to 1 million at a 32% sales ratio. Again, the theme of affordability. But cross the $1 million mark and the drop off is significant. So from $1 million to $1.25 million, there was 167 active listings with only 18 sales. That's an 11% sales ratio. 1.25 to 1.5 million, there's 312 active listings and there was only 27 sales, which came in at a 9% sales ratio. That's a lot of homes sitting with very little movement. Now, let's talk about the worst market, which is Surrey condos, because that's where things get bad. Right now, there are 905 active condo listings in Surrey, ranging from 200,000 up to $1 million, but 905 active condo listings. Let that sink in for a second. Now, the most active price bracket for condos comes between 300 and 400,000. That's where 18% of all the listings are concentrated. So there's currently 181 active listings and only 26 of those sold. So even though it's the busiest bracket with the one with the most demand, you're still looking at a pretty brutal ratio. Now, a larger sample size, but between 400,000 and 800,000, so we're gonna have a mix of 1 beds, 2 beds, studios in there. This is where things fall off. There's currently 816 active listings between 400 and 800,000 and only 106 sales. And it's safe to assume most of those condos are sitting and waiting. So Surrey's condo market right now is a buyer's market that is genuinely struggling. Massive inventory stacking up across Surrey in every price segment and just not enough demand to absorb it. Now, is there opportunity in Surrey? Yes. If you're a buyer, you have options, you have a lot of negotiation power, and you can find real value if you're patient. But if you own a condo right now in Surrey, you need to be very intentional about your pricing because buyers have 905 options and they know it. Now, let's finish with South Surrey and White Rock because this market actually breaks the pattern in a couple of interesting ways. South Surrey and White Rock is probably the most interesting market to analyze right now because it doesn't follow the exact same patterns as everywhere else. On the detached side, the entry level performs as expected. 1.5 to 1.75 million has 95 inventory with 21 sales, coming in at a 22% sales ratio. Then something unusual happens in what the middle market is. Between 1.25 and $1.5 million. There's 105 active listings and only 10 sales happened. So that came in at a 10% sales ratio. That middle gap doesn't follow the affordability pattern that we've been seeing everywhere else. But then once you move into the higher end of Surrey, it holds up better than you expect. 2.2 to 2.5 had 42 listings with 11 sales coming in at a 26% sales ratio. And then 4 million to 4.5 million had 8 inventory with 2 sales coming in at a 25% sales ratio. Now, compare that to Langley, where above 2.75 million, there was only 1 sale in the entire market last month. So South Surrey's luxury market is functioning. It's quiet, but it's not at a standstill like Langley. On the community level, Pacific Douglas led at a 16% sales ratio. Elgin, Grandview, and Morgan Creek all came in at 15%. Those are your most active neighborhoods right now in South Surrey detached. Now, looking at the White Rock attached market, the affordability story is back. Between 300 and 400,000, there's 12 listings and 5 sales coming in at a 42% sales ratio. That's the highest sales ratio of any of the attached brackets that we've looked at today. Now, between 700 and 800, it came in at a 20% sales ratio. Then 800 to 900 came in at 25%. And then the 1.5 to 1.75 million, which is likely row homes, crossed into seller's market territory at 18%. So what the South Surrey / White Rock story tells you is that when a market has enough lifestyle appeal and prestige, the high end can hold up even when everything else is softening. That's the South Surrey and White Rock story right now. So if I had to sum up everything we just went through in one sentence, it would be that this market rewards affordability and punishes everything above it. We saw it in Langley, we saw it in Cloverdale, we definitely saw it in Surrey, and we also saw it in South Surrey / White Rock. Every single market, every single time, the price points that make financial sense for buyers are moving well. Everything above that line is sitting. The second theme running through all of this is the move up ladder. Condo equity is converting into townhouse purchases, and then townhome equity is converting into entry-level detached. And the buyers who can't quite make that jump into detached right now are landing in row homes or larger townhomes instead. So now quickly on the rate side, markets are starting to price in an increase by the end of the year rather than cuts. Oil and gas are up, energy costs are on the rise, inflation follows, and the Bank of Canada has less room to cut. So with that being said, my honest expectation, prices to flatten down another 2 to 3%. And I've been saying this and I still stand by it. April was strong. May already feels like it's taken a step back. And we have May already seen the peak of the spring market. So what does this all actually mean for you? If you're a buyer, know your price point and be decisive with it.